All right, guys. So market's down. Um, we're gonna do a poll the first thing this morning. Let me know if you think it's time to buy the dip or not. The market's not actually crashing. Although the SPY is at the teens right now, at the 418s, 419s, and so we're getting a pretty decent pullback. Kind of giving back a lot of the gains we've made this year. And again, we're gonna do a poll here. Let me know if you can hear the music. You should be able to. Will the market bounce today? Yes or no? Vote. Market is mostly down from Tesla earnings as well as Powell's speech on Thursday. Market's basically scared of that. Oh, man. Hope you guys had a good weekend. I'll probably buy the dip, but it just depends on which dip we're talking about. Tesla's down probably the most. Nvidia all the way down to 400s again. So Nvidia at 409s, that's a pretty big, important spot for it. Let's see if it holds over 400. S&P. I mean, the S&P is currently at 42, 43s. I mean, 3,300s is still a pretty big ways away, but I mean, it's possible. Again, slap the like button. Looking at our poll numbers, will the market bounce today? 62% say no, 38% say yes. Yeah, problems overseas. That's what's going on. See if we can figure out the biggest news stories of the day today. Dow down 200 points. 10-year treasury yields up over 5% right now if we look at the 10-year yield. This is the 10-year yield right now, which is crazy. That is the 10-year yield. That's crazy, though, for the 10-year yield, man. Yeah, so the 10-year yield over 5%. Hey, what's up, Beach? Good morning, John. And all the perspective of bigger problems overseas is giving worried investors. Yeah, for sure. That's definitely going on. Again, futures tied to the Dow dropped 227 points or 0.7% this morning. S&P futures and NASDAQ futures both down almost 1%. Benchmark 10-year Treasury note yield climbed about 9 basis points over 5%. The yield on the 2-year note and 30-year note also rose. We're in the blackout period ahead of the FOMC meeting next week. The FOMC meeting's next week, I believe it. Let me check to make sure. I think it's Wednesday. It might be Thursday though. They've been doing a little weird stuff with the actual dates. So yeah, so it's Wednesday. Okay, so they're back to normal. So again, next Wednesday, we got non-farm employment, manufacturing PMI, JOLTS job report, ISM manufacturing, and then the Fed meeting November 1st. So interesting for sure. This week we got GDP, PCE data, new home sales, Case-Shiller, Amazon earnings, Google earnings, Meta earnings, Microsoft earnings. Very busy week this week, to be honest, man. We just got a gang of stuff to go over. I'm going to be busy all week. It's going to be stressful. But the show must go on, and so we are going to stream. Today we don't really have much, though, outside of, like, big earnings, So, like, we got Royal Phillips. We got a couple, like, small regional banks this morning, specifically, like, the Bank of Marin, the Bank of Hawaii, HBT Financial, Hope Bank, Dynex Capital, Metro One, Acme, United Corporation, Hope Bank. I think I said that one, and that's about it. Royal Phillips. Those are all the earnings we really got this morning. The only one that actually dropped is Hope, HOPE, Hope Bank. But, again, nothing really big. Cleveland Cliffs this evening, along with Logitech and a couple other ones, but it's pretty small, all things considered. We also have Coca-Cola, Verizon, GE, 3M, RTX, Spotify, General Motors, NextEra, Halliburton, Danaher, and a bunch of other ones tomorrow morning. But then it's not just that tomorrow morning. So tomorrow morning we have that. And then in the evening, we've got Microsoft, Google, and Snapchat. Mostly going to cover Microsoft because Microsoft's the most relevant for like AI and stuff like that. So pretty big week, man. We got a lot of big earnings. Now, if there's one thing that could save earnings, so yeah, we got a gang of earnings this week. And so again, it's a really important week because we have some big tech earnings, specifically Meta, Microsoft, Google, and a bunch of other ones, to be honest. And so this is one of the biggest weeks earnings season wise. Not a slow week at all this week for earnings. Again, tomorrow we got Microsoft, Google, Snapchat, Visa, Teladoc, Coca-Cola, Verizon, GE, 3M, RTX, Spotify, General Motors, as well as just a bunch of other stuff. And Texas Instruments, Weatherford, Boyd Gaming, F5, a bunch of other real estate stocks tomorrow too is what we're looking at tomorrow. So that might influence markets. And again, I'm looking at stuff that might either make this situation worse or make it better. Tesla, again, one of the big reasons that we have the dip. And I mean, I'll probably sit in Tesla. Again, I'm waiting for the Cybertruck to come out in about a month. And then Wednesday morning, we've got Boeing, Thermo Fisher, T-Mobile, Hilton in the morning. And then Meta, IBM, ServiceNow in the evening. Yeah, I mean, that looks like a terrible stock, king of all kings. The daily chart looks like terrible, you know, like a stock going up, 40, 50, 60% after it drops, 95%. It was at $20 less than a year ago. Now it's at $1.39. And so it's just a bad looking stock, bro. I'm not buying it. I'm not getting anything with real estate. Maybe it's got some momentum plays for day traders, but like not for me. I'm just not messing with it, brother. Yeah, GDP comes out. And again, Wednesday we've got Meta earnings. We're going to be streaming. Thursday we got like UPS, Royal Caribbean, Altria, Southwest, Merck, MasterCard, Bristol Myers, Valero, Comcast, Honeywell, Hertz, a bunch of other ones, Hasbro, Keurig, PG&E, Harley Davidson, Overstock.com. Thursday is probably the biggest day. Thursday morning, dude. Wow. Thursday morning. We got so many earnings Thursday morning. Like relevant earnings too. We've got Ultralife, Reliance Steel. There's so many: Harley Davidson, PG&E, Hasbro, Keurig, First Citizens, Lennox, Hertz, Honeywell, Boston Scientific, New York Community Bank, Comcast, Tractor Supply Co., American Tower Co., MasterCard, Bristol Myers, Valero, Merck, Southwest, Altria, Hershey's, UPS, Royal Caribbean. That's Thursday morning, and then Thursday evening we got Amazon. Another day we're going to be streaming Amazon earnings: Intel, Ford, Chipotle, Enphase, Skechers, U.S. Steel, Capital One. And then that'll probably be it, except for big oil numbers dropping on Friday, specifically Exxon, Chevron, IV, Phillips, and a bunch of other ones. And that's not even including the economic data that we have coming out. So again, just to put this into perspective in terms of economic reports coming out. Tuesday, we've got the Case-Shiller, Flash Services, and Flash Manufacturing PMI tomorrow morning. Wednesday, we got new home sales. Thursday, we got GDP data expected at 4.5%, which is a pretty big jump, to be honest, relative to the last one that came in at 2.1%. So GDP for the third quarter drops Thursday at 8:30. We're going to stream that live. We also have jobless claims numbers coming out at 8:30 on Thursday. Durable good orders coming out at 8:30 on Thursday. Retail inventories coming out at 8:30 on Thursday, and then at 10 pending home sales. And then Friday, we got PCE data, which if you don't know what PCE is the personal consumption expenditure index. It's really the Fed's preferred inflationary metric. Like it's what they use to gauge inflation over CPI or PPI or anything like that. They're gauging inflation from PCE, the personal consumption expenditure data. Black Monday is trending. What was it, October 23rd? Okay, so black number was October 19th, so it was last Friday. Or no, it was last Thursday. What do you guys think about Amazon? It's down 90% after a 1-for-10 split 2 months ago. Yeah, it's just not my style, man. Anyone playing Teladoc earnings? Probably not. Not a big enough company. Teladoc, I don't know. Yeah, Powell definitely didn't help. Well, it's not Powell, really, Johnny. What it really is Tesla earnings hurt the market for sure. Tesla earnings absolutely tanked the market, is what happened, bro. So Tesla earnings, that's what happened. So Tesla earnings came out way worse than expected, and a lot of people were still excited because of the Cybertruck debuting, and so a lot of people were still hyped up because of the Cybertruck announcement date that it was going to start getting produced. And then Elon came out, the first two sentences of his earnings call were basically saying that the Cybertruck was not going to give good margins, and that, it's a money pit basically, and that, they basically he tried to dress it up as they tried to make it too cool or whatever he said. But that was the second sentence out of his mouth on that earnings call, was that the Cybertruck was not going to make a lot of money. They weren't going to see any good margins for that. They weren't going to see any good income benefits from that until like a few years from now, is what he said. And that just destroyed Tesla stock. Tesla stock now all the way down at $208 a share. That's what happened. And then Powell came out Thursday, and he said some hawkish things, but he also said some dovish things. I think this is mostly from Tesla, though. Tesla stock is kind of tanking the market right now, is really what it is. Yeah, the 10-year yield is up. Again, we showed you guys this earlier. The 10-year yield is up to 5.02%, which is crazy. 10-year shooting up. Yeah, what's up, Alexis? So Christian has not a good question, man. Again, and it's all good, Christian. Like, it's all good, bro. I'm going to tell you this so that you understand it, man. But like, it's not that easy to make money, brother. Like, trying to make an extra $100, is like, it's just not that simple, brother. Listen, I'm not trying to hate on your question, Christian. I'm trying to help you, bro. I'm really trying to help you, man. So Christian says, here's a quick one for you. I'm a new trader. If I wanted to buy a contract today and make a quick $100, which stock do you think it'll jump at the open for a quick gain? Listen, it's just not that simple. It's really just not that simple. You're making a very complex thing, a very, very nuanced thing simple, and it's just not that simple. It takes a lot of time to learn. And again, I don't know what stock is going to jump up to make you $100, bro. Nobody does. And going around asking that question is just going to set yourself up to be taken advantage of. That's the reason I think it's not a good question. It's all good. I can respect the fact a lot of people come in here and they just try to act like they're just stock trading millionaires, like they're making 20 million a year just trading stocks and all this nonsense. And so I honestly respect the fact that you opened up with like, yo, I'm new, and I appreciate that. So I'm not hating on you, brother. I'm just saying it's not that easy. Nobody knows what stocks are going to jump, especially today, in a day in which it's really red out there in the market. Like, the market's really red. You could try to play an extended bounce. SPY's still at 420, so it's still all right, but we could try to play an extended bounce, but that's certainly questionable at best. And so I would just be really careful today, man. If the market keeps bleeding, I would be careful. And then you say contract. I'm not sure if you're talking about option contract or if you're talking about futures contracts. Both of those are going to have different strategies in mind. Yeah, well, the big thing about Amazon and Microsoft this week is that they have earnings. Tomorrow we have Microsoft earnings, and it's really risky. It's big win. It's big win and big loss potential trying to trade options ahead of their earnings tomorrow, because they can come out good or bad, and you can have a huge win or a huge loss. So I would just be careful. Options contracts. Well, you can't trade until 9:30 today. You can't trade options contracts until 9:30. So you're going to be stuck not really being able to trade anything anyway right now. But yeah, my point is, nobody knows. I wouldn't take stock picks from people on YouTube, bro. They're going to act like most of the time what will actually happen with the stock pick sellers is that they'll give you a really small reward target, like a really small reward target, and then they'll give you a huge risk so that you'll keep coming back to them. Like if your risk is 10 cents, 10 cents a share, and your reward is 5 cents, you're going to win much more than you're going to lose, even if it only has a 50% accuracy rate. Like even if the stock does a similar move on the upside and downside, I mean, you're going to win more than you're going to lose because your reward target is much smaller. And so when you look at that, that's what a lot of the people selling stock picks do, is that they give you a really tiny reward target and a huge risk, right? They might give you a 30-cent risk, 5-cent reward target. So you're going to make money. And so for a trader that's new and doesn't understand, they're going to be like, wow, this person's great, but when you do lose, you're going to lose so much more. And that's one of the ways they do it. There's a lot of ways. I would just be careful. Again, that's just me. Watch the VIX. Yeah, the VIX is a volatility ETF index. It's up today for sure, though. A lot of the time it moves inversely to the markets. The Indian stock crashed today due to the 10-year yield. Yeah, I can believe that. Always check the add ticker symbol advanced and decline line. It's called market internals. You can measure volatility. Yeah, I mean, you can look at the VIX. There's a lot of ways to do it. Yeah, VIX is at 2250s right now if we look at it. And again, I mean, it makes sense. The market's incredibly volatile right now, just big upward, downward moves. So the market's incredibly volatile. VIX is at basically 2250s, 2260s. So a lot of people calling for Black Monday today, man. Let me know what you guys think. I think it's Black Monday today. Kind of a scary day, man. NASDAQ, we'll see. All right, guys. So yeah, VIX is up big throughout all this volatility. And again, if you don't know what the VIX is, it measures volatility. And it moves inversely a lot of the time. During these big drops, the VIX is going to go up a lot of the time. And we'll see if it holds. There's the SPY. Tesla down, a lot. Tesla is really one of the reasons it's dropping. Again, Tesla released their earnings last week, came in worse than expected on both metrics, as well as had some disappointing Cybertruck announcements. You know, a lot of people use the VIX for option pricing, right? So they use it to gauge premiums because, you know, like for instance, the higher the VIX, the higher the demand for options, the higher the premiums. Funny that GM last week announces over a year delay in their EV truck production and nothing from the market, yet Elon utters a little negativity. Yeah, I mean, it wasn't a little though, bro. I mean, okay, so think about it this. People are asking, like, what's so disappointing? And let me explain here. So what's so disappointing is that Tesla had bad earnings, right? They missed big on EPS and sales and revenue, right? So they missed pretty big. So number one, that's the first thing to understand is that Tesla missed big on earnings. They missed big on EPS, big on sales, right? So their sales revenue, their EPS, which is profitability, was down, you know, relative to expectations, right? That's number one, right? So that would normally cause a pretty bearish response in markets. Now, one of the things that was propping them up despite that was the news of the Cybertruck. Everybody was kind of hanging on what Elon was saying. Everybody was hyped up. They were going to announce the Cybertruck debut, and they did, right? They did announce the Cybertruck debut, but the first couple words were that the Cybertruck was not going to be good for margins like they thought it would, and that it was kind of a money pit, and essentially it wasn't really going to make them any money for years. That's what he said. And so that essentially sparked this huge market correction that we're in right now, this big dip in Tesla specifically, where Tesla's all the way down at 200s. You know, if we look at Tesla all the way down at 208s, 209s, Nvidia basically at 400s again. That sparked it, right? And then Thursday, Powell had a meeting, and the meeting was freaking chaos, bro. Like, we streamed it, but the meeting was freaking chaos, dude. The meeting was crazy weird. Essentially what happened during this meeting is that, number one, it started up and there was some type of protest live, right? So they had to escort Powell out of the meeting, get him outside, wait for the protest to die down. And we were streaming all of it. It was kind of chaos, right? So after they got all that settled down and they basically drugged the protesters out of there, after they dragged the protesters out of there, then Powell spoke, and Powell was a little bearish relative to what people expected, and then that tanked the market. You know, and again, we've got chances that the market will do okay. You know, we do have chances that the market's going to do okay, specifically the chances of earnings coming out tomorrow. You know, we don't really have any big earnings today, but tomorrow we've got Microsoft, Google, Snapchat, Visa earnings. We also have a bunch of earnings in the morning as well. So if we look at like tomorrow morning, we got Coca-Cola, Verizon, GE, 3M, RTX, Spotify, General Motors, NextEra, Halliburton, Danaher, Dow, Polaris, you know, a bunch of earnings tomorrow morning. And then tomorrow evening, again, the big boys come out with Microsoft, Google, Snapchat, Visa, Teladoc, Texas Instruments, a bunch of other ones tomorrow. And again, that sparks off the biggest week of earnings season yet. And all those earnings we talked about, plus Boeing, T-Mobile, Thermo Fisher, Hilton, then Meta, IBM, you know, O'Reilly, Baker Hughes, Edwards, then UPS, Southwest, Altria, Hershey's, Valero, Amazon, ENPH, Intel, Chipotle, Ford, Skechers, US Steel, Capital One, Exxon, Chevron, AbbVie, Phillips, and a bunch of other ones, to be honest. So that's this week. A lot of earnings. So that, if there is something that could potentially save the market from turmoil, that's it. Again, Black Monday has been trending throughout Twitter and rest of markets here. And so we'll see if we hit it today. A lot of people are saying it's going to be version 2 of Black Monday. If you don't remember, in 1987, October of 1987, there was a day called Black Monday in which markets crashed, basically. So markets essentially crashed on October 19th, 1987. It is now referred to as Black Monday. Although, honestly, the 87 crash wasn't like a terrible one. Like, okay, it was bad. A lot of businesses went out of business and stuff. But like when we really look at the S&P, right? So like here's the S&P. All right, so 1987 is here. This is Black Monday. Like I'm not saying it's not bad. I mean, the SPY dipped from 340s, 330s, all the way down to 220s. It was a big drop at the time. It wasn't a small drop or anything like that. I mean, it dropped like, a third. You know what I mean? So it dropped like 30%. So it was technically a crash. But like when you look at this relative to some of like the big bear markets in history, right? So when you look at this in 1987 mixed with like this from the 2000s, like the 2000 boom and crash, then you look at the mortgage crisis that happened in 08, then you look at, even 2020. Now you have to understand these are all relative to the increases in price, right? So like these are all like they look a little bit different because of the increases in price, but still, I mean, Black Monday, if we look at actual Black Monday here, the market bounced back. Like here's Black Monday. The market, wait. Is this Black Monday? Yeah, so here's Black Monday. But like, again, you got to understand the market bounced back. So we were back up. The market crashed. Right. We were back up where we were, in less than a year. So in less than a year, we were higher than where we were before. And so it was a slight bearish period, but it wasn't like some huge sustained crash. So Black Monday was one of the more mild stock market crashes in history relative to some of the other ones we've experienced. In terms of both how much we dropped as well as how long it took us to come back from it. Yeah, definitely problems going on overseas, hurting everything. What do you think the market's going to do today? I really have no idea. I hope we go up. I don't want to see market turmoil, but I also understand that, like, honestly, eventually markets crash. Now, I'm not sure if that's what we're going to be in right now. Honestly, we're not anywhere close to it, even with this dip, right? Like, you look at a weekly chart. We're basically in this right now. So I don't know. I don't know what we're going to get. I don't know whether we're going to hold or not. I think 420 is a pretty big psychological level, and I think we got a lot of big earnings coming out this week. So we got some chances to save the market, but anything could happen. Elon did it on purpose. He might have done it on purpose, but it's not because he's in cahoots with Burry. He might have done it on purpose because he understands the Cybertruck's coming out November 30th, and that with that, he is able to buy up more shares. And then ahead of the Cybertruck debut on November 30th in like a month from now, right? So he could have intentionally did it, but it's not for the reason you might think. It's probably, if he did do it intentionally, it's probably so he could buy up some cheaper shares. Yeah, I mean, Raphael, though, like most of the time the market is contrarian, so like if everybody, I told you guys about this before, like years ago, people were calling for a crash, right? And again, this is not a crash what we're currently in, but even if we do crash, they were still wrong because it's been years. But basically a year or two ago, everybody said crash, imminent crash, right? And retail traders sold. And then the market pushed up heavily, right? And so who missed out on the gains? Retail traders did, right? And so in this instance, everybody says, oh, the market's going to go up in October. And then we do this, right? And so the market's very contrarian. So it's one of those things where if a lot of people in my chat say one thing, I'm usually looking at the other way because the market its job is to fool traders. Big caps, talking about earnings, the big caps could push further down to, 100%. The big caps could hurt the market as well. If we do crash, it's going to be because earnings come in bad, right? So if we do crash, it's going to be because, tomorrow Microsoft comes out, Wednesday Meta comes out, Thursday Amazon drops. The big boys drop this week, and so if we do crash, it's going to be from that too. Like if they come out negative with earnings, if they miss, right? If those stocks miss earnings, market's probably going to, be kind of sketchy. By the dip, I don't know, man. I mean, I'm already in a lot of stuff, but I'm just probably not just gonna. I'm just not gonna sell. I'll probably just sit it. I'm not in anything that's got me super extended, so I'll be all right. We'll see what the market does right now. Again, yields are up so high. Elon said he wants to buy Wikipedia if they change their name. What is this person talking about? Nobody remind me of the Astros loss, bro. The next game is going to be the big game. When's the next Astros game? That's today. Tiebreaker today. It's 3-3. Bro, at a certain point, you think they're doing this on purpose, bro. Like, they want so many games. Again, looking at our poll numbers here. We already got 250 votes. 51% say the market's going to bounce. 49% say the market's not going to bounce today. Again, Powell last week, crazy. Yeah, the war's scaring people. I don't know, man. I really am the type of person who... I'm the type of person, like... I disagree with the U.S.'s foreign policy. I think we should just stay out of everything. But again, that's just me. Oh, for sure. That's what I'm saying. Yeltsin, like they intentionally drag him out to be the longest freaking series they can. They know the longer the series, the more they can milk from it. And Powell's tie was purple. Pretty sure he's been rocking a purple tie lately. I'm gonna lose so much money. How do I cope? You limit your risk and don't get overextended in the market to where anything is going to cause you to lose so much money. Yeah, you just got to remember, trade small, man. Like, don't trade super large. You know? Sorry, I'm like I'm trying to reach. All right, let me get the music playing back. Yeah, they just want more people there. If the US stays out. Yeah, I understand that, Spawn, but I don't think we should worry about what other countries are doing, you know. Yeah, I'm sure defense stocks are doing okay. I mean, some of them are doing okay. Like RTX is still down. You know, again, yields being up so much is kind of crazy. That's what's scaring people. I mean, again, look at yields this morning, over 5% still. SPY bounced back a little bit. We were at 418 super early, so we have bounced back a little bit here. Tesla's still at 209, struggling. You know. All right, guys. So all right, so we did get a little pop in the SPY here. I don't know if we're gonna hold or not. SPY testing the VWAP here, the 200 EMA volume weighted average price level, right around where we are now. All right, so we got a little rejection at the VWAP here on the SPY. A little rejection here. We might start taking some trades if we can. Salesforce downgraded by Piper. Was it really? What's the Salesforce symbol? It's CRM, yeah. Down to under 200 bucks now. Interesting. We got about 300 people here already. Pretty good for 7:30 in the morning. Kind of a chaotic day. All right, guys. So rejecting a little bit on the SPY. We're kind of sitting tight here, waiting for some good action, though. Again, big week this week, although today is a little slow. We don't really have any big economic reports today. All right. All right, guys. So kind of sitting back here, watching to see this 419 level in the SPY. Looks like a good spot. I'm looking at market news as well. Pull up my chat room, see if we got anything good. Again, a lot of people talking about Black Monday, about today being Black Monday. The reason is the market's down pretty heavily over the last couple weeks. Specifically, starting out last Wednesday with Tesla earnings, the market's been on a pretty fiery drop here. You can see we right around the 17th. So Tesla earnings came out here on the 18th right here. So Tesla earnings came out here, and then the market just dumped after Powell spoke as well. So Powell spoke here, and the market just cratered since then, and the market's been pretty red. SPY at 419s. Most of this is, again, from Tesla drops. Tesla came out with bad earnings as well as a negative outlook on the Cybertruck in their earnings call. And you can kind of see they are really what's tanking the market right now. You know, Tesla was at 250s, 260s prior to this latest news release, and they've slumped really heavily heading into that. Again, mostly from specifically Tesla earnings and Powell coming out negative. We've been trading a little bit this morning. Trade on the micros. And CVNA, yeah. Yeah, we'll see. I mean, again, I don't know what today is going to be. I don't think you can get there with Cybertruck despite its cash flow going positive in 1 year. I wouldn't really call this a crash. Not yet. But maybe today, if the market, again, this week is, if we do crash, this week's certainly a possible week for it. With a lot of big earnings dropping this week. That's what I would watch for, is these big earnings coming out this week and just hurting markets. Again, tomorrow we have Microsoft. Tomorrow we have Google and Microsoft earnings. Wednesday we have so Google and Microsoft tomorrow. Wednesday we've got like Coca-Cola, Verizon, and then in the evening we've got Meta, and then Thursday we've got Amazon and a bunch of other ones too. So we actually got a pretty busy earnings week, and so if the market does crash, it's probably going to be from earnings. And maybe we bounce today. We'll see, but we definitely haven't been bouncing lately. Good luck, Leo. Oh, D, you haven't been around very long, though, brother. I always tell people the truth in how I look at it. You know, crashes are certainly possible, but they're still less likely. Like, it's still unlikely that we're going to crash, just to put it into perspective. But it's possible. I mean, listen, we've had some really red action right now. We've had some really red action heading over the last week, specifically from Tesla and Powell, right? Tesla, bad earnings, bad Cybertruck outlook. Followed by Jerome Powell coming out Thursday, tanking markets. So those are two pretty big red catalysts, right? So that's two things that are red right now. So two red catalysts here. Now, when you mix that with the big earnings that come out this week specifically, that's when we can get a recipe for big volatility. If you look at the VIX right now, you know, the VIX is up a lot. VIX is sitting currently at 2250s. It's starting to pull back a little bit, but still, you know, there's a recipe for volatility, especially this week with the big earnings coming out. And then Friday, we have inflation data again. So Friday, we've got PCE data, the personal consumption expenditure data, as well as GDP on Thursday. So we got a gang of stuff coming out today. It's going to be a very busy day. And it's something that you just kind of want to be careful with because, again, the market, you know, we could have some big pullbacks, some big actions. Doesn't mean we're going to crash, but it's possible. All right, guys. Look at the SPY rip back up here. So we're getting some green action so far. We're at 419.60s. But again, the craziness is going to happen. The craziness is going to happen after the open, most likely. Again, the VIX is still pretty high. Look at Tesla rise. Let's see if we got any news to influence this. I don't really see anything, but we did get some bounce backs in a lot of different things just now. Look at the bounce. Look at the SPY bounce. Look at Tesla bouncing. NVIDIA down a lot too. NVIDIA's at like 407, 408. Yeah, there's no Fed speakers until next week. Next week we got the FOMC meeting on Wednesday. I don't think we're going to cut rates, Shelton. I think that's very unlikely. Rate cuts, very unlikely. You got to understand inflation's still a massive problem. And so, yeah, I just don't think they're going to cut rates anytime soon. Yeah, the 10-year back under 5% now. It was over 5% for a little while. Finally pulled back though. Nice. So SPY's still moving up a little bit here. So we're starting to get some move backs. Microsoft, not down that much, man. Oil, of course, has been ripping up. Doge is trending. Yeah, the 10-year yield was over 5% for a little while today. So we're holding at the 200 EMA. You can kind of see the pullback to it. Here's Tesla fighting that level. Tesla almost back up to 210s. So that's good. I mean, maybe we'll get some bounce backs today. The market definitely needs it. Market definitely needs it. But again, who knows what we're going to get or if we're going to hold or what. Kind of a crazy market right now for sure. Yeah. Well, it's a crazy time. Again, I'm not saying we're in Black Monday, but a lot of that word is trending. And so, there's an argument that we're looking like that. Again, if you don't know, 1987 October was called Black Monday. Market dropped like 30% in basically a day and then ripped back up. The crazy thing is like Black Monday, again, I've said this before, I'll say it again. Black Monday is not a huge historical crash. It's just not, right? It's just not a huge historical crash. We mostly rebounded within a day, within a year. We were back up higher than where we were before Black Monday of 1987, right? So it's not the biggest historical crash. It's one of the most mild crashes we've ever had in the history of the stock market. Now, again, it doesn't mean if we do, again, earnings this week are going to be big. That's the most I'll say. All right, so the fastest declining U.S. housing markets are Austin, Texas, down almost 12%. Boise, Idaho, down 8.6%. New Orleans, down 8%. Lake Charles, down 8%. Phoenix, down 7%. Vegas, down 7%. Provo, down 6.5%. Reno, down 5.5%. Yeah, a lot of people saying Tesla's still okay. Yeah. All right, guys. A lot of people calling for Bitcoin, man. If you look at Bitcoin, dude, Bitcoin almost at 30K, right? Is it over 30K yet? Yeah, Bitcoin over 30,000. So that's the silver lining in all this craziness, is that crypto is doing all right. Yeah, it's kind of crazy. Like, you can kind of see interest rates rising for everybody. Like, interest rates are rising for homes, they're rising for mortgages. I mean, they're rising for cars, right? So everybody's paying cash right now. Cash is really what's getting it done relative to everything else. And it makes sense why. Like, when interest rates are sky high, nobody's really going to want to pay 10%. That's so much money over the life of those loans. Nobody's trying to pay 10%, man. When it's amortized, it's just what a crazy world right now. Dude, my throat still hurts, bro. My trachea hurts, dude. Ugh. Yeah, I went to jiu-jitsu on Saturday morning, man, and I got put in an Ezekiel choke. So an Ezekiel choke is like this, right? Or like It's hard to explain, but it's like that. I got out of it. I didn't actually tap. I got out of it, but now my throat hurts still. I think my throat was already hurt from rear naked choke practice the other day, but man, hurts to swallow. Feels like I have a cold, but I don't. Like, I'm okay. I'm not sick, but my throat hurts when I swallow. It was starting to go away too, but then the freaking Ezekiel choke, man. All right, guys. SPY at 419.70s. Cash, yeah, cash is what's buying it right now. Yeah, 31K. I'm still a hodl on Tesla. It depends on how long you're holding it. Hey, what's up, Wesley? I mean, no, the market's down still, even despite this little bounce. Like, this little bounce is nothing relative to this. Like, we're down still. But again, pre-market today is not what's red, right? Like, pre-market today is not what's bad. This is what's bad, right? Like, this right here is what's bad. We started this on the 17th, and we basically dropped every day consistently for the last, like, week or so, a little bit less than a week. Tesla's starting to bounce back up. It's also Tesla. Tesla down to 200s basically right now. Nvidia down to 400s right now. So yeah, sideways day is W right now if we can. I don't know what's going to happen today. Generally, I'll look at extension and I think, okay, the market's down so much, maybe I can buy the dip. But again, I think we're vulnerable right now to potential bigger drops. I think it's a very volatile week, specifically because of earnings coming out today or this week. I mean, so we got earnings this week. We got inflation data this week. We got GDP data dropping on Thursday. So we just got a lot of stuff coming out this week. Yeah, we got a lot of stuff coming out this week, and so we'll see what happens, you know. Wait, didn't you just yell at a guy the other day for asking why the market was down? No, not that I can remember. Did I yell at somebody for saying the market's down? I don't usually yell at people for saying the market's down. At least not that I can remember. You know, sometimes the market's going to be down for sure. Market's not going to go straight up. Who is selling? Tesla shares, mostly Nvidia shares as well. Yeah, Bitcoin basically at 31K. I'm still in Bitcoin futures at 30.84 thousand. We'll see if that ETF gets approved. I'm sure that has a lot to do with it. Yeah, I don't ever yell at anybody, you know. All right, so I'm seeing some other scary news here. Yeah, I'm not sure what the market's going to do. Again, a lot of people are calling for Black Monday on Twitter. We'll see. We're not really there yet. I mean, the market's definitely down today for sure. So we're at 419.70s. Yeah, the problem with the Ezekiel choke, Randy, is that it usually is really hard to finish people with it. You know what I mean? Like you can kind of, you know, like catch people with it, but it's usually not going to choke you out. It just hurts. And so you can usually jolt out of it and be okay. that relative to like a punch choke or something like that, where like a punch choke is the same thing as an Ezekiel, but you're using your fist instead and you're kind of going like that. It just depends on where you get it. A lot of the time people do it wrong, and so it just ends up hurting their trachea like mine, but not actually tapping me. Maybe I should have tapped. My throat hurts. Chevron acquiring Hess. Interesting. Bitcoin and ETH. I know ETH has accumulation time. Yeah, bro. I saw the Hamzat thing, man. That was crazy. Honestly, I'm still kind of mad about how the Johnny Walker fight ended. I feel like Johnny Walker wanted a way out, though. You know, I think Johnny Walker just wanted a way out. I think the dude he was fighting, I think he just wanted a way out. And so he acted like he was hurt, and then acted like he was surprised when they called the fight off. I was pretty mad about that. All right, guys. Hey, we're almost got 400 people here. Not even 8 a.m. yet. Let's see if we get some good stuff. Again, look at Tesla starting to bounce. Tesla at 210. SPY at 420. Almost 420. Right around 420. Yeah, I think he's been hit too much, man. You know, I saw a video of Johnny Walker getting KO'd like 7 times in like a minute, you know? So he'd get KO'd, wake up, they didn't stop the fight, he'd get KO'd again, he'd wake up. And so he's gonna be punch drunk if he doesn't retire soon. He's super exciting to watch, but he's gonna be punch drunk soon if he doesn't stop. Yeah, I don't really ever yell at anybody. I'm assuming they're talking about how I've been kind of critical of people who say the market is going to crash every day. And again, I think some people like get really emotional. I think you got, like, I talked about this last week, but like you got some people who, if I have an opposing view to them, they get really emotional and like spiteful about it and just kind of get weird. But it's like, we're all going to have opposing views in the market. Like, that's part of the market, is that like we're going to have differing views. That's normal. Like, I might like stocks y'all don't like. I might think the market's going to do a different thing than somebody else. The only thing I really criticize regarding bears is that every major economic report, they say the market's going to crash. They say the market's going to crash, the market's going to crash, the market's going to crash. Right. And I think, and again, I always tell people, if anybody actually watches the stream objectively, and instead of just trying to critique me or whatever, just actually listens to what I say, I always tell people it's possible we crash. I never deny that it's not possible to crash. I always tell people the same thing, which is that it's certainly possible we crash. I just don't think saying that every major economic report that I cover is the right move, you know. But of course, it's always possible we do crash. Crashes happen, you know. One thing that you'll hear me say pretty regularly is that even if we do crash, the crash predictors are still like 10% accuracy, 5% accuracy or less, because I've heard a lot of them call out a crash every day or every major economic release for like a year. And so I think it's important to understand that throughout the market, you're going to have constant people predicting crashes, and most of the time they're wrong, but it doesn't mean we're never going to crash or the market's never going to go weak. Again, I said this morning, I think, and number one, we're not crashing yet, right? So we're not crashing yet. And if you look at my title, it's a question mark. Like, what do you guys think? As well as Black Monday is trending on Twitter, right? But we're not there yet. We're not anywhere close to there yet. And if anything, in order for a crash to actually be here, we would have to drop to like the 380s or so. So for this to be considered a crash, short term, we would have to drop down here, you know, which we're very far away from on a weekly chart. We're just pretty far away from it. And so the point of me criticizing crash predictors is that a lot of them have been predicting a market crash every major economic report for years, right? And so when I hear that day in and day out, at a certain point, it's like, all right, bro, you know. But again, this is not a crash. We're not anywhere close to a crash yet. Although people are talking about it now. And again, at this point in time, I can agree that it's possible. Specifically, it's possible if earnings this week come out negative, right? So again, tomorrow we've got Microsoft, Google, Visa earnings. Wednesday, we have Meta earnings, Coca-Cola, Verizon. Thursday, we have Amazon and a bunch of other ones, right? Friday, we have Exxon, Chevron, and a bunch of other ones, right? And so with all those big earnings coming out, now's the point in which it's actually possible that if we get a bad run of earnings, we could crash. Again, I don't think we're always in a constant state of crashing, but I think it's possible if we get a bad run of earnings, the market has a heavy correction. That's certainly possible. But again, we're not there yet. We're actually still technically green on the year right now. So we're still technically green on the year. So yeah, we're just not there yet. Right. If you keep saying anything long enough, you're going to be right. It doesn't mean I'm wrong for criticizing constant crash predictions over and over again. You know what I mean? And again, most of them don't even have the same name. Most of them end up just changing names because they know they've been wrong, and again, a lot of people follow these other big influencers who just say a market crash is here, and they've been saying it for like years and years, right? So like every major economic report, like they know talking about a crash gets views, right? And so every major economic report, a market crash, right? And when people hang on those words, a lot of people are desperate for like mentorship in the market or whatever, right? And so they kind of hang on every word they say, But again, I don't even think we're there yet. My title is a question. Do you think we're there yet? Chat and let me know. Do you think we're there yet? Do you think today will be Black Monday? That's another thing that's really trending on social media is whether today will be a carbon copy of Black Monday. Let me know. Again, it's possible. I don't know if it's going to be today, though. I think the bigger volatility is going to be tomorrow, Wednesday, Thursday, Friday. Friday, we got PCE. Thursday, we got GDP and Amazon earnings. Wednesday, we've got Meta earnings. Tuesday, we've got Google, Microsoft, Visa earnings. So, and then a bunch of other ones. Like those are just a couple, and we really have a lot of earnings. Yeah, I'm looking at other stuff here today. So Michael Saylor's MicroStrategy Bitcoin investment is currently at a $60 million unrealized gain. Yeah, man. Yeah, Airbnb crazy expensive, man. Again, Airbnb I think is on the decline. They're taking too much money, bro. Like they're taking too much money. Like you try to book $185 a night room, the cleaning fee is $225. The service fee is $52 or $53. So for a one night offer where you're paying $185 a night, you're gonna end up paying $450 plus after fees. So it's literally like it's 200% higher than the actual like advertised price for Airbnb. Like I'll go to a hotel just because I know how much it's going to be, right? Like the last time I stayed at an Airbnb, bro, I remember I spent like $4,000 for like a week in this house, bro. $4,000 a week, bro, dude. Again, I'm gonna go stay at a hotel for $100 a night and have breakfast made for me every morning. Like screw Airbnb. Do you guys like Airbnb? I'm definitely not about to be behind that. Yeah, I hope we run up, man. I hope we're not. Yeah, tomorrow earnings, man. It's a big day. Really tomorrow, Wednesday, Thursday. Yeah, the 10-year already broke over 5% this morning. Again, we took a picture of it. So the 10-year is already rising pretty heavily, to be honest. Again, I don't know what we're going to get, but the 10-year is already pushing up big. Currently, the 10-year yield is at 4.98%, 4.89, or 4. Yeah, we're basically at 5% again. We're at 4.99% on the 10-year yield. And again, if you guys don't understand, right? So again, I'm going to give you a crash course in bonds and their correlation with markets and influence over economic reports and stuff like this, right? So, okay, so the first thing to understand is that there's many different types of inflation hedges that investors use to hedge against inflation long term, right? Like most conventional investments are used as a hedge against inflation, because if you just sit on cash long term, you are losing money long term because your cash is going to be worth less and less over time, right? Like what you're going to be able to buy for $100 is going to go down, is going to become less and less. So you're going to be able to buy less and less for $100 over time because of inflation, right? Because of rising prices. And that is a very true thing in regards to the entire world. Prices go up. Now, with that said and out the way, you can invest in these different things to hedge against that. You can invest in the S&P 500. The S&P 500 will usually give you about 10% a year, but there's risks. There's risks of crashes and market corrections, and so if you have to get out imminently, it's less easy to plan for that S&P 500 investment and those gains, because again, they're not guaranteed. They're just not guaranteed. Now when you have real estate, which appreciates about the same, a lot of other, you got gold, which kind of over the last 20 has done better than the S&P in terms of like movement. Gold has done really well over the last 20 years. It's like 6x over the last 20, and gold has been pumping up lately. It's almost back up to $2,000, which is great. Looks good, and all that's good and fine. AMC said there, but anyways, you got all these conventional investments, right? And then you have bonds, and bonds are seen as a very safe investment. If you look at people, they're saying bonds are safe, and they are. And the reason bonds are safe is because they are guaranteed returns. So the yield that you get from bonds are guaranteed. Like you are going to get that from the U.S. government. Treasury bonds specifically. There's other type of bonds, but treasury bonds are basically you loaning the U.S. government money and the U.S. government paying you a return of that money, an interest on that money, right? So right now yields are at 5%. Yields are at 5% when the S&P has only given about 4.5%, and so bond yields are surpassing the more risky assets. So basically, if you buy $100,000 in 10-year notes, you're going to get your 100K back in 10 years, and you're going to earn 5% annually. So you're going to make, with 100K, you're going to earn $5,000 a year, earning over a 10-year period 50K. You're going to basically make 50% of your money over a 10-year period if you invest it with bonds, and it's guaranteed returns, right? Now, there's also the yield curve, which shorter term bonds are paying out more than longer term bonds, right? Which is the yield curve, the inversion of the yield, the inversion that you hear people talking about. And what they're referencing is shorter term bills. I believe shorter term treasury bonds are called bills, right? I think they are paying more than longer term, right? Which is the inversion you hear people talking about. All of this can signal volatility in the market. But bond prices shooting up like this, it usually means the market is dropping because they're all competitive, right? So the more people that buy bonds, the less people that are going to invest in the S&P 500 or the NASDAQ or the Dow, so forth and so on, right? And so generally, if bonds are shooting up, it means the stock market and other markets are falling down. And so right now, bonds have been pushing up. You can look at like the 10-year yield and see that the 10-year yield, if you look at, we can look at a longer term chart, and this is going to probably be up a little bit. Here's a 20-day chart on bond yields, right? And so you can see over the last 20 days or so, bond yields have been going up dramatically, which means that you get paid more for investing in them. And when you correlate that to something like the S&P right now, which is given like 4% on the year, it's only up about 4% over the last year. It's a weird market because the more risky assets like the S&P are paying less than the less risky assets like guaranteed returns on bonds, right? And so the whole market is in a weird state right now. And yeah, anything could happen here. A lot of it has to do with the trouble overseas and the conflicts overseas. The real estate market is struggling, specifically commercial. And the market's in a weird state right now. Again, earnings season is here. And so we'll see if that helps the markets right now. But again, we're in a weird market right now, a weird time. A lot of commercial real estates are going broke, I'm sure, because people are realizing, number one, that they don't need, you don't need to rent out a warehouse and fill it with people. You can just let them do it digitally remotely from home and not have to pay rent and all these different things. And so over time, as technology grows, commercial real estate is going to be the first thing that struggles from it. Why? Because that's the more natural, direct effect of it. You don't need to, again, as people are able to work remotely from home, you don't need to rent out commercial real estate as much anymore. You just don't. As mail order products like Amazon and stuff like that, you're not going to need physical brick and mortar stores anymore. You're not going to need call centers like that anymore. You're going to be able to work from home in that regard. And that's the obvious technological growth of the future, right? And the first thing that's going to negatively affect is commercial real estate, because I think that makes perfect sense. Are bonds better than cash? Yeah. They're going to earn you more over time than cash will, certainly, 100%, without question. And so, like, for instance, if you got 100, and I was telling somebody I know about this, they were like, yo, I got 80K sitting. I got 80,000 sitting. And I told him, I was like, look, bro, you could buy bonds if you're really, and he was like, I'm skeptical of investing in the S&P or in the markets, in the stock market, he said. And so I told him, I was like, hey, bro, you can buy bonds. Like, again, you buy $100,000 worth of treasury 10-year bonds. You're going to earn 5% on that money. So they're going to pay you annually as well. So, like, you're going to get checks from the government each year. And then at the end of that period, at the end of that 10-year period, if it's a 10-year bond, you're going to get your 100K back. And so, again, you're going to make $5,000 a year for 10 years, which is 50K, and you're letting them borrow 100K. So you're going to earn 50% over a 10-year period. The problem, though, and the reason people don't like bonds, like, that might sound good and fine if you don't understand, like, how the market really works. But the stock market is going to give you 100, or is going to give you 10% on average, right? So you invest 100K into the stock market. On average, you're gonna make 100,000. You're gonna double your money over a 10-year period in stocks versus bonds, right? And so in that regard, stocks are the more risky assets, because if you have to retire imminently, is the example I always use. Like, if you need the money now, right, and after 10 years, if you need the money right away, and you get unlucky and you get stuck in a market crash or something like that you got to wait for it to come back on, then you lose money. And so in that regard, they're the more risky assets, the stock market is, but they will pay you almost double on average that bonds pay you over long-term, investing in them. So again, S&P will give you 8 to 12%. Bonds will give you 5% right now. And 5% is high, but it's a weird, there's a lot of nuance behind it, to be honest. Or lose everything? Yeah, I mean, you could. It's very unlikely, and if the market goes to zero, you're gonna have a lot bigger problems than what your investments are doing, because that would take that would be a terrible thing. a terrible thing. But, you know, again, the market's not going to go to zero, you know, and if it, I mean, it's possible it does, but we would need like the whole world would be in a very dangerous spot. You know what I mean? Like it's incredibly unlikely the market goes to zero. Um, and if it did, the last thing you would be worried about is your S&P 500 investment, you know? And so I wouldn't, it might not go to zero. It might drop 50% and you might lose half of the money you invest is a more likely outcome. But again, every market crash in history has bounced back within five plus years. Sometimes it's a little bit over, sometimes it's much less. Like again, Black Monday of 1987, we bounced back in less than a year. We were back over where we were prior to the crash, right? So sometimes we bounce back very quickly. And so generally the people who lose the most in crashes are people who get emotional and sell. A lot of people end up buying dips on the crashes, which is probably the go-to that I'm going to look at is buying pullbacks. Yeah, I mean, compounding is a different thing. I'm just kind of trying to make it as simple as possible so people understand. And some treasury bonds compound and others don't, you know, so you got to make sure you get one of the compounding ones. All right, so again, SPY down here at 419s. The Q at 352.80s. We can look at Tesla. Again, Tesla's one of the big ones that have caused this drop. Although we do have a new kind of trend forming. I mean, if we look at this trend, you can kind of see us. We're kind of in this trend right now. Like, look, I can kind of see this trend. You know, and we'll see if we actually break out of it. But I do see a little trend forming there. Can you please look into Ride or Mara? Well, yeah, I mean, it has nothing to do with short squeezing or anything like that, Tobbs. It has to do with Bitcoin being over 30K. And so I can already tell you Riot and Mara are going to be gapping up today because Bitcoin is noticeably higher. You know, these move with the price of crypto. And again, the problem with these is that they're all based off of the price of Bitcoin and ETH, you know? And so I don't know. I was never a big fan of investing in miners. I heard a lot of hype about these. People were talking about these hitting $100, you know, years ago, and they just never did. And now they're all the way down at $7 and $8. And it's not the shorts. Like people are always like, yeah, the shorts are the ones hurting it. I think that's a very retail trader mindset who are just looking at the shorts like there's some big bad guy keeping their stocks down. Like most of these companies are struggling because they're weak. Right, they're weak. They're not earning that much money. It all has to do with margins, right? They're not. If your company's not earning that much money, stock price is probably going to go down. And the crypto market has been incredibly volatile and risky. And so, in turn, a lot of these miners, especially with energy prices and stuff like that, a lot of these miners their margins are going to go down over time. But it's not the big bad shorts keeping them down. It's just the fluctuation and volatility of crypto. So. Shorts are future buyers. Some of them are stock holders, like they're shorting stocks. Yeah, the COVID dip, I made money on. I'm pretty sure. I'm not sure, Dros. Interest rates were 15 to 18% in the 80s. What were rates on T-bills? Let me see. What were yields on treasury bills during the early 80s? Let's look at it. The Federal Reserve Bank of Boston has like a good paper on it. Let's see if there's a graph. I'd love a graph, but I don't think I see one. Okay, so here's the 10 years. Yeah, I mean, they were at 10%, basically. So in 1986, right, in 1986, 1987, 10-year bond yields were at basically 10%. They were at like 9.5%. If you want to look at the graph I'm using, this is the graph I'm looking at right now. So you can kind of see. So again, here is 1987, 1986. You can kind of see the bond yield was like 9.75 or so, maybe a little bit less than that. But yeah, so they were high when interest rates were sky high in the early 80s is what I'm assuming you're talking about, whenever interest rates were freaking crazy. What's the news on Apple? Down 1%. Apple, I'm not sure. I mean, Apple's probably just down with the rest of the market, to be honest. So I think Apple's just down with everything else. I mean, the whole market's down right now. It's not just Apple. When you look at Microsoft, I'm sure it's down today. It's slightly. All right, there's the SPY starting to pop back up a little bit. Tesla down, Amazon down, Google down, Walmart down, JP Morgan down. You know what I mean? So like everything's kind of down today. Bitcoin still ripping. Yeah, Bitcoin almost 30K or almost at the $31,000 level. Here's the Q. Okay, we got to look at Tesla a little bit as well. Tesla right at the 200 EMA VWAP level. Yeah, but again, I would say the fear right now is there's a lot of scary, For many years, Bill Gates used to fly economy, not because he couldn't afford first class, but because he didn't consider it good value. It's 5 or 6 times more expensive, but only marginally better, according to Mark Randolph, co-founder of Netflix. In the same vein, I could afford a really nice car at this point, but I've never been a car guy, and I don't need a Lambo or Maserati. A Volvo station wagon. Volvos are nice, man. I like Volvos personally. I don't need to drop $1,000 on a bottle of wine. Nobody does. Honestly, wine, I'm not saying there's not good wine, right? But I also think it's kind of a nonsense market, right? Like I think it's placebo effect, confirmation bias to the fullest, Like maybe it's just me. When I drink wine, I notice no difference in the wines. You'll hear like wine experts be like, oh, the taste is this and this and this. And it's like, bro, this all tastes the same to me. So I think they're just justifying drinking is what it is. I'm not judging. I mean, listen, drink if you want to drink, but like, don't waste $1,000 on wine just because it tastes marginally better. Not unless you really got money like that. If you don't have money like that, again, there's a very famous quote: "Don't try to look rich, be rich." A lot of people go broke trying to look rich, and so. Yeah, they're super safe. Volvos are super safe. Yeah. Small triple top rejection on the NASDAQ. Yeah, I mean, we got this little top right here. I don't know if I'd call it a triple top. This one's a little bit higher on the SPY. Maybe the NASDAQ one looks better. I think it all depends on what Tesla does up here. Like Tesla's trying to climb. And again, if you haven't already, check out TopStep. TopStep funded account program and futures. They give you a demo. They test your skill. If you can hit the target while following their rules, they fund you between 50K up to 150K with a 90% split, and they pay out millions and fund thousands of traders every year. They pay out millions in actual withdrawals every year. It's a great way to learn day trading with just less risk. You know, you can take these and again, I made a video about how to get funded easy on Top Step. I can't guarantee you're going to get funded with my method, but it's very simple. Like what I ultimately do is I build up a cushion. Like I build up a small cushion first. Maybe it's $100, maybe it's $200. And I usually only trade either micros or the regular E-mini with one contract only. Once I do that, if I can build up a cushion of a couple $100, then I'm allowed to take larger risks if I want to, or I could just walk away, right? But usually if I want to get funded on a combine, I take larger risks, right? So we build up that cushion, we take larger risks, and then we make $500 or $600, and then we can either sit out for the rest of the day and wait, or we can take larger risks from there. Only when we have a large cushion on the day. Using that method, if you really want to get funded, you know, you can get funded pretty quickly using that method. You know, now you have to have good strategies as well. And this is not even like, we're not even talking about like strategies or patterns in terms of actual day trading, but using that method, it makes it a lot easier to get funded, in my opinion, because you're only taking risks when you have a cushion. And if you don't have a cushion, you know, if you don't have a cushion, I just walk away if I'm down a couple $100. You know, I just walk away. And if I do have a cushion and I lose, like say I build up a cushion of $100 to $200 and then I lose, then I'm break even, right? And I don't have these big drawdowns that end up destroying traders' accounts. And I hope traders can learn from this, not just with funded account programs, but just risk management in general, right? Like using it like this and trading it like this, it's just much better to use it this way with good risk management. You know, I think it makes a lot more sense to use it this way, and it ultimately protects traders from having big drawdowns, because one of the main reasons day traders lose is they have these big drawdowns in their accounts, right, that they're unable to come back from. And I think in this regard, it makes perfect sense because you're only really taking large risk when you can and when you should. And again, in the futures market, you can day trade short, buy market, sell market, all that good stuff. And there's no PDT rule in futures. I can day trade essentially the SPY and what's called the E-mini. I can day trade the NASDAQ 100. I can day trade currencies, gold, silver. The patterns are very similar in futures that they are like to stock blue chip patterns, but there's no PDT rule. And so if you lose, you're only out $49. Again, they give you a demo, test your skill. If you can hit the target while following their rules, they fund you. If you don't, you're only out $49. And if you do get funded, you get a 90% split once you're funded. So in that regard, it makes perfect sense. If you want to check it out, here's the link. I'm up $75 in a Top Step trader evaluation account. What size of a cushion should I get? I mean, it depends on which account you have. It depends on what you're trading, a lot of stuff. Again, personally, I can't tell you what type of cushion you should build for yourself. It depends on your risk tolerance. I like building, my system involves building up a cushion of a couple $100, right? But I'm only trading the regular E-mini or micros. So I have to be trading micros or the regular E-mini. I'm not going to trade the NASDAQ. Even one contract at the NASDAQ is so volatile, it can just turn against you very quickly. You can lose $500 quick. So when I'm building up the cushion, I only use the regular E-mini, which still moves very quickly, and you have to be very careful, or micros. You know, so I'm looking to build up a cushion of a couple $100 at least, hopefully more. And then if I have a $200 or $300 cushion, then I can take 2 contracts at the E-mini or 1 contract at the NASDAQ or so forth and so on. But you just got to condition yourself through repetition to cut your trades when you need to, because a lot of people just sit and hope. Anyways, the SPY is bouncing pretty high over 420. You can kind of see Tesla rising back up. So Tesla all the way back up at 211s, almost 210.50s. I also see Apple rising back. Apple's at almost 172. Hey, what's up, Wade? Could you give us thoughts on emotional control? Well, I mean, I'm going to preface it with sometimes I make dumb mistakes and get emotional about my trading. Everybody does. It's impossible not to with trading. Like, you're going to get emotional and make dumb trades sometimes. That's part of it. Again, the best thing that you can do to get rid of that is just get your reps in. Like, just, I always use the example of Pavlov. You know, if you don't know who Pavlov is, he did this experiment called on classical conditioning, right? So he conditioned. So what he would do is he would ring a bell and feed the dogs. He had some dogs. He would ring a bell, feed the dogs, ring a bell, feed the dogs. And he did that over and over again until he took one of the stimuli out of it in terms of the food, right? So he would ring the bell, and then he would study the dogs, and he wouldn't put the food out there, and he would study the dog's reaction, and he realized that the dogs would salivate, like they would drool, even though there was no food, and so basically he conditioned them through repetition to drool on command. Anyways, you might be thinking, how does that have anything to do with trading? What it has to do with is emotional control. And so if you trade over and over and over again, it'll become easier to control yourself relative to somebody who just recently got involved in the market and they've never done it before. And so emotional control is a very difficult part of trading. It's one of the most important parts. And the only way you really get better at it is by doing it over and over again. Like when you do it over and over again, you become less sensitive to fluctuations. You become less sensitive to losses. And when you do that, it becomes easier to cut your losses when you need to, and not worry so much about winning or losing, and just trying to, let your edge play out. But again, it's experience. Again, one of the reasons I'm against a lot of these courses is because no matter how good of a course it is, right? Like no matter how good of a course you buy, they got a lot of people selling courses for thousands and thousands of dollars. And no matter how good that course is, most new traders are going to lose. Doesn't matter how good of a course it is, right? And they're going to lose because they don't have that emotional control condition. Like they don't have good conditioning in that regard. They haven't done it enough. It takes time. It's one of the reasons most new day traders fail, is because it just takes a lot of time to get right. And you have to have a lot of discipline, and you do have to condition yourself to make the right decisions. And that takes time. No course is going to teach you that. So. Yeah, I mean, they're a sponsor of mine, guys. So the Top Step is a sponsor of mine. So I'm certainly biased in their favor because they pay me money. But really useful company, been around for over 10 years. All right, so again, look at the SPY bounce at the 200 EMA. Right now, we're kind of choppy. I mean, we're in a little bit of a trend. If I extend this to the right, you can kind of see this trend on Tesla here. I don't know if we're going to hold this trend, but I certainly see it right now, at least. Yeah, all good. S, thanks, man. Yeah, I'm looking at the 10-year yield. The 10-year yield's at about 4.98% now, so it's dipping down a little bit relative to where it was this morning. But I've been watching this guy, Craigslist Hunter. It's actually really interesting. He runs a pawn shop, basically. But he also created a YouTube channel about it. So yeah, Chevron bought Hess. But yeah, dude, how about Makachev, man? Knocking Volk out. Whew. Impressive. Honestly, I wish those fights were on. I was so tired watching those fights. I still watched them. But I still watch the fights, but like, I know they're overseas, and so they're a little bit different. But man, I was so tired watching them. I wasn't as into him as I should have been, but I watched the fights. The Johnny Walker fight, you know, had to end in a no contest. Who's going to win the World Series this year? Let me know. You know, another niche of YouTube I've been kind of interested in is watches, bro. Like, I'm kind of getting into watches, right? And I'm watching a lot of these videos about like watch dealers. The problem though is like the fakes are getting so good. Like counterfeit watches are getting so good. I would have no idea what I'm talking about, and I don't want to get scammed for a $30,000 watch. That's playing with big money. I don't know if I really want to, you know. I don't know if I want to mess with that. Too easy to get scammed. But chat, talk me into it or talk me out of it. Same thing with the pawn shop idea. The problem with pawn shop, I would assume, is location, right? Like if you get a bad location, nobody's going to go there. As well as like selling the goods in the pawn shop, you got to sell most of the stuff online, I'm assuming, right? So like you open the pawn shop and then you buy people's stuff and then you sell it online, I'm assuming. Right, because most like foot traffic might mean less than that if that's the situation. But Philly looking strong. Yeah, I mean, hey, Phillies. Well, the whole market's scared right now, Chris. Mostly from yeah, it's 8:30, but we don't have any economic data out today. Market's pretty quiet today in terms of economic data. You're one of the most honest traders on the internet. Thank you. Hey, thank you, Ray. I appreciate the love, man. Thanks so much. Do you own dividend stock? And if you do, reinvest the dividend or take the payout? I mean, I don't know. I mean, I own some divvy stocks. I don't really watch the dividends, though. Most of the time, I'm investing in the company. The poker player? Is there a big... No, I don't mean the World Series of Poker, but I do love poker. I thought the main event was done already. Am I wrong? Is the main event still going on? Yeah, it happened in July. Unless there's another tourney going on in poker right now. I haven't been able to watch poker, man, lately. I want a good fake. I saw a video where a guy wear the fake one when he goes out of the country in case he gets robbed. I'm down to have a good watch. Yeah, I mean, I wouldn't mind. Some of the, like, they call them super fakes. They're like $500. But again, the problem is that, like, I don't know. You can look cool with it, but I don't know. Again, Astros got beat yesterday. And now it's 3-3 heading into tonight. We'll see what happens. And then again, big earnings tomorrow. I'm sure this is Pawn messaging me and giving me pawn shop advice. And I appreciate it. Yeah, there we go. Knew it. Yeah, for sure, Pawn. The fakes are getting really good. That's what I saw in the video. Is that some dude like, yeah. Yeah, I'm okay with Texas winning, right? I'm okay with them winning because they've never won before, right? So the Texas Rangers have never won a World Series before. So, like, if the Astros do lose, as long as the Rangers end up winning the series, the World Series, I'm okay with it. You know, like, I'm in Texas right now. I'm not from Texas, and so it's not like I'm rooting for Houston because I like Houston and I live in Houston. But if the Rangers win, I'm okay with that too. And I still might go to it as well if they do win. But we'll see. Don't say that, Angel. Don't say that. Phillies are more in the news than Astros. Is always something that is up in the news, and Arizona kind of weak as a team. Yeah, I don't think the Diamondbacks are going to win. Yeah, I know. Hey, I appreciate the help, Pawn, for sure. Again, I'm thinking about it. It's something that I'm kind of toying with right now. You know, I've got some extra money. I don't know what I want to do with it. I know I don't want to sit on cash. I know I don't really want to buy bonds and earn $5,000 a year off of it. It's just not enough, unfortunately. And so we'll see what I do with it. I don't know what I'm going to do with the money yet. I've already got a good stock portfolio, so like, you know, that's covered. And again, I don't know what I'm going to do with the rest. All right, guys. Again, look at Tesla. Tesla right at the top of that trend line that we've been drawing all morning. We're at 210.60s right now, 210.60s. It's a busy week right now. It's a busy week. Buy a beach house? Where? The problem with a beach house is that I'm scared. Like, bro, I grew up, like, I'm from Louisiana, right? Like, I'm from Baton Rouge, Louisiana. The problem with beach houses is that I'm freaking scared of them. I'm not scared of the beach. I'm not scared of water. I'm scared of hurricanes destroying my investment is what I'm scared of. Like, I grew up and traveled to Pensacola a lot when I was young. I'm from Louisiana. Hurricanes have taken a lot of properties out that I know of. And so my fear is not water, but hurricanes, right? So that my fear investing into beachfront property is that I'm going to buy it and then we're going to have a bad hurricane the next year and it's just going to get, you know, it's just going to get destroyed. That's my fear. You know what I mean? Like, that's what I'm scared of. Yeah, that's kind of how I am. Like, I'm with either of them being. I would rather the Astros win, but I'm okay if the Rangers win too. Isn't that what insurance is for? Yeah, but they only pay out a certain amount. So will BIL really give 5% a month? Will they pay me monthly on it, Corey? How do I get the interest payments? Will it just reflect in my balance? Will they pay me like dividends? Like, how is that going to work? Because if so, I'll throw my money into that while I wait, you know? Yeah, NVIDIA starting to climb back. So NVIDIA technically green on the day now, back up to 414s. Okay, yeah, maybe I'll do that if it stays high. Yeah, so it says average maturity in years, 0.1 years. Average yield to worst is 5%, which is the lowest potential yield that could be received on a bond without the issuer actual defaulting. Yeah. $30-day SEC yield is 5.25%. Do I have to wait until the first of the month to buy it, though? Is the question. Or can I just buy it now? It doesn't matter. When does the dividend payment come? Is it scheduled? Hold on, let me look. All right, so I'm looking at the dividend history. I don't know. The next one only pays out. The last one paid out in August. But it stopped. I don't know why it stopped. At least NASDAQ stopped refreshing it. I don't know. So if I buy it and sit, is it 5% annual or is it 5% a month? Like if it's 5% a month, that's great. But if it's 5% annually, again, I could just buy my own treasury bills to do that myself. Yeah, well, the insurance is going to be expensive. Yeah, NVIDIA just tapped the green level and then pulled back already. So again, here's NVIDIA. All right, we're at 414s, 413s. So NVIDIA fighting its way back, kind of flat on the day. The NVIDIA problem is not today, though. The NVIDIA problem is the last. Again, if we look at a 10-day chart, this is the big problem with NVIDIA, is that it's dipped like this, over the last couple, months. Yeah, the good news is that my son's been doing a lot better, man. He was struggling for a while. He's got him on a new ADHD medication, and he's just been doing much better. So, so we are dipping down some now. NVIDIA, again, tap that previous closing price. You can see this light blue line is the level at which it goes from red to green, green to red. Tap that level and reject it here. Again, Tesla started to creep up. And now it's kind of pulling all the way back down. So we'll see what happens here with Tesla. Still got to wait for it. Let me look back. All right, so people are saying annual and monthly. Which one is it? Because here's the thing, right? So if this is paying out 5% a month, right? So if this is paying out 5% annually or 5% a month, it would be paying 60% a year plus potential compounding. You know what I mean? Like 60% a year seems too good to be true, no? Yeah, it seems too good to be true. Like 5% monthly seems a little weird. And I hope it's right. But like I hope it pays. If I could invest 100K and make 5K a month, why wouldn't I just live off of that forever? With 100K, I could make, 60K a year just kind of chilling. And like that doesn't make sense. Yeah, I'm not trying to rent a condo. I'm talking about investments. I don't know. I don't know if it actually pays 5% a month. Again, it seems too good to be true. If I had 100K, that means I would just make $60,000 a year with 100,000. Like that seems good. Like all anybody would ever need is 100K and they can never work for the rest of their life. Now, again, I'm sure it's not going to stay at the same yield if it did, but it sounds too good to be true. Let me look. Yeah, so the 1 month right now pays about 5.416%, right? But they're not talking about like this is annual. It's not monthly, right? Like they're not going to give you 5% a month. I wish they did, right? Like again, 60% a year, easy 60K. By just I wish it was that, but it's not, unfortunately. This is annually, right? So what this probably realistically pays out is on a monthly perspective, right? So 5 divided by 12, so you're gonna get about 0.4% a month. So like if I invest 100K, I'm gonna get, or no, that's wrong. I'm gonna get, if I invest 100K, I'm gonna get $400 a month in interest, which isn't bad, right? But it's not freaking $5,000, Right, 200K. Me and my wife could make 120,000, no job. Yeah, it just wouldn't work. I wish it was. I wish it was real, but it's just not. It's just not. It's not going to pay 5% a month. Yeah, the S&P 500 is only given about 4.2% this year, and so it's just not a reasonable expectation, I think. Anyways, SPY pulling back the 200 EMA and the volume weighted average price. Tesla at 210 right now, 210 and a half. AGNC Real Estate Investment Trust pays more than that a month, over 10%. Yeah, but I bet you it's not risk-free. You know what I mean? Like the problem with this, I can already tell you looking at this, the problem is that it might pay you that yield, but you got to hold on to it. And this is the long-term graph, right? And so any money that you make in interest is going to be negatively compensated by this stock dropping on average, 25% a week, And so, yeah, it's just not that easy, unfortunately. Selling what charts? 10K a year selling what? If I get it, will I stop trading? Probably. If I made 5% a month, yeah, I'd probably stop trading, because why would I trade? If I could make 60K a year with 100,000, yeah, I'm not gonna trade at all, bro. I mean, y'all shouldn't either. But yeah, unfortunately, yeah. So Corey said, yeah, it's annual. So you'll make, with 100K, you'll make about $400 a month. Still not that bad, right? But it's definitely not 5,000 a month, All right, guys, let's get ready. All right, team. Sitting back waiting here. Again, Nvidia trying to bounce back. Um, I guess the one of the lessons for today is that there's no such thing as easy money in the market. Again, the easiest money you're going to get are bonds, and you're going to get much less than the S&P 500 pays out on average. And so, again, it just depends on your risk tolerance. Like whenever you go to a financial advisor, right, or whenever whenever you have a financial planner dealing with your stuff, right, he's going to ask you what you like, whether you like high risk investments, mid risk investments, or low risk investments, right? If you like low risk, he's going to put your money in bonds and sit on it, basically. If you like mid risks, he's going to probably do a mix of bonds, index funds, so forth and so on. If you like high risks, he's probably going to go with individual stocks mixed with mixed with a few of the others. But that's essentially what you're going to get from financial planners, right? So you could either do that yourself. Again, you should do it yourself if you have high discipline. If you don't have good discipline, it's what I always tell people. Like, again, I've had family members ask me about investments that didn't have anything to do with me, like for kids and stuff. And I always tell them, look, the real difficult thing in investing, right? Like I always said, like, don't let your kids control it, because the real difficult thing with investing is they're not going to be able to touch it. So like in order to really make that 10% in the S&P, you have to not touch it. You got to leave it there. You got to let it sit. You can't get emotional and sell. You can't get emotional and buy more. You got to just leave it alone. And if you can leave it alone, that's when you get the edge play out over like 5-10 years. If you can't leave it alone, you're going to ruin any edge you get. Remember, the biggest losses and crashes are people who get emotional and sell. The people who do the best are people that just sit on their S&P investment long term. Those are usually the ones that are able to benefit from this long-term edge in markets. Like, look, and you can see the S&P again in 1993. The S&P, the SPY was at $42, $43. Today it's at 420. So, but you gotta leave it alone and you gotta let it sit, and that's difficult for a lot of people to do. Buy a laundromat, recession proof. The problem with the laundromat, and again, I think it has good. It can have pros and cons, right? The problem with the laundromat, there's a few problems. Rent is high. Most of the time, you don't own the building. The maintenance costs on those machines can be very high. If they start breaking down, you're SOL. You're not going to be able to do much. As well as, energy prices are obviously super high, and so you're at the whim of energy price fluctuations, so forth and so on. Now, laundromats can generally be good, but there's a lot of risks with them, I guess. But high risk, high reward. That's not true. The very wealthy people take profits. I mean, the very wealthy people are able to earn money in ways that we can't, mostly because they have access to more money, right? And so the bigger, okay, the easiest way to put it, right? Say you've got 5 mil, right? Like say you got 5 million liquid, right? Just in interest payments, just on bonds, right? Just on bonds, that $5 million can earn you $250,000 a year just on bond payments, and so that's a big edge, to be able to earn $500,000 a year, more than the average person earns with 5 million. That's the goal that you all should have, because again, once you have that much money, you can live off of it very easily and not really lose money. Not very few people are actually going to spend more than $250,000 ever in a year, right? Some people will, of course, if they have bad spending habits or if they want to live really, really luxuriously, but most people are not going to spend that much. And again, that's just a small piece. Like the really wealthy have access to investments that we can't see or hear. But what I will tell you is that most of them let their money sit. They don't get emotional and sell. They don't do super short-term trading either. Like short-term trading is mostly done by retail investors, and short-term trading can be powerful, but it's not something like the wealthiest people in the world certainly don't do it that much, because again, it's high risk, and they're not. Again, one thing that comes with being rich is account preservation. Like you got to save your money, you got to protect your wealth, and short-term trading basically is not it's a risky form of investing for sure. But again, it's not really arguable. Again, you can kind of see it in this, right? Like here's the long-term view of the S&P. If we put up the S&P 500 here, You know, the edge is not arguable. Like, people act like it's like the edge isn't real. Like, the edge is here. You know, you can see it. It's not really arguable because you can kind of see the history over time. Like, the 10% annual returns are pulled from the market. Like, they're pulled from the statistics of the market of the last century. So of course that's the big edge you get. There's a lot of other nuance that. So we need to bag hold for 10 years to have an edge because, I mean, you don't need to. You can do whatever you want to do. If we're talking about investing, yes. You know, again, you could try to play short term. You could try to swing trade. You could try to do whatever you want to do. Again, a large majority of people that do that lose money. The biggest, most profound edge in the market is sitting on stocks or bonds or real estate or gold long term. You know, gold has 6x'd over the last 20 years, 30 years, right? And so it all depends on your risk tolerance. You could try to short-term trade, you know, but when you sit on things long-term, you get a guaranteed return. So like the biggest, most profound edge, like consistent edge, is sitting on things long-term. Now, and again, sitting on things long-term doesn't really have much to do with skill either. When you look at short-term trading, that is pure skill, right? That is pure edge, pure skill. And some people have it and some people don't. But I'm not telling you to do anything. What I'm telling you is that a lot of people miss out on investing because they're out here chasing short-term gains. And that's great. And I day trade a lot, you know, every day. But I also invest long-term, and I think that's a really important strategy to hedge. Well, yeah, I mean, Mike, anybody can identify one stock that underperformed over the last 6 years, right? But we're not talking about Disney. We're talking about the S&P 500, the NASDAQ, the Dow, gold, real estate. You know, that's what we're talking about. We're not talking about Disney. You know, anybody can pinpoint one stock that didn't do that great. We're talking about when you add them all up and average them, you know. No, I'm not really getting trolled. I think this is good stuff to teach people, Wayne. People can disagree. It doesn't necessarily mean they're trolling. It's all good. Yeah, Corey said another business idea is those big ice machines that pump out bags of ice. Yeah, I mean, they might be good. I think it depends on location, though. It depends on where you live. If you live at the beach, sure. But it depends on where you live and where you can sell it at, and if you can get those deals in place to sell them, I'm sure. Yeah, I mean, big hedge funds, they get their data quick, and they have access to faster data than retail does. All right, guys. Hey, we got less than 30 minutes here. Let's get ready to day trade. We've been trading a little bit this morning. All right, so yeah, we're gonna get ready to day trade. Let's play some fun. And again, if you want to day trade, try futures. Futures are probably the way you want to do it. A lot of people, like, they spend so much time trying to day trade stocks, and so they save up all this money, and they need 25K to be able to actively do it. And there's just a lot of trouble trying to actually day trade stocks. There's so much red tape behind it that it's very difficult to do freely unless you got a really large account. And even with a large account, a lot of new traders have no risk management skills. And so they end up just losing a bunch. Where try futures. The futures market, there's no PDT rule. You can day trade short futures. Not really any PDT restrictions. And it ultimately allows you to learn how to trade. And if you lose, like a combine on Top Step's $49. And so if you lose, you're out $49, right? If you're good enough to pass it, you can potentially get funding between 50 to 150K with a 90% split. And so the reward is very similar. The risk is noticeably less, in my opinion, although they are a sponsor of mine. So I'm biased in their favor because, again, they pay me money. And so naturally, I'm going to be biased. And you want to confirm all this with them. But again, it's just a reasonable way to learn day trading. With lesser risk than most people are going to take. Again, day trading the S&P or the NASDAQ, or, I can day trade the 2-year treasury note futures. I can day trade the NASDAQ, which is basically the QQQ, or the NASDAQ 100 is what this is. I can day trade the S&P and the SPY. I can day trade currencies, gold, silver. I can't day trade the SPY specifically, but I can day trade the same price action in the S&P, which is the E-mini, S&P E-mini in futures. Yeah, slap the heart button. Yeah, I'm just going to ignore the trolls. It's all good. The edge of the market is so obvious that, again, you can kind of see who, the really new retail traders are. Again, it's not really arguable. Okay, so here's the S&P 500. Here's a weekly chart. And this is what you get holding long-term in the S&P. Sure, we get crashes in between here. Look, we're going to get crashes here sometimes, and we're going to get crashes here, right? But when you look at the edge long term, it's not really arguable, and this is basic stock market 101. I think a lot of retail traders get talked into betting against the biggest long-term edge the market ever gives them. And again, I think sometimes retail traders can be gullible, in which they think that we're in some never-ending stock market crash. And they end up missing out on the biggest long-term edge the market ever gives you. And again, I day trade, but you just got to be smart, guys, and understand there's the guaranteed edge is long-term in bonds and the market, whatever you want to do, right? Bonds are guaranteed returns. Now, you can find an edge short-term as well, but I think the right move always is to hedge against whatever that is with long-term investing as well. Yeah, we got Google earnings tomorrow. We also have Microsoft earnings, Corey. So we got Microsoft, Google, and then we also have Snapchat tomorrow as well. Tesla's down a lot on the day. I mean, look at Tesla right here. So Tesla's struggling. Tesla had bad earnings and bad Cybertruck outlook. Although it has been in an upward trend for the last couple hours, but it's still pretty red over the last few days. Yeah, there's higher risk trading, lower risk trading. I would say the truth of the market, right, and is that the shorter term the trading, the more risky it is. The longer term the trading, the less risky it is. But it varies. It depends. Yeah, we have a bunch of earnings tomorrow, to be honest, in the morning and in the evening. Again, Microsoft, Google, Snapchat in the evening. I can't remember which ones are in the morning. I think it's Verizon, Coca-Cola, and a couple other ones, but I'm not sure. Yeah, so it's Coca-Cola, Verizon, GE, 3M, Spotify, RTX, GM, NextEra, Halliburton. There's a bunch of them. Yeah, hopefully NVIDIA can bounce back up. It's been a struggle, though. NVIDIA's down with everything else. Okay, TA. Yeah, because Hess getting acquired sometimes isn't a good move. It just depends. They got acquired by, Chevron, right? But it doesn't necessarily mean they're going to go up. It was Chevron, or was it Exxon? What's going on with the Q? All right, so yeah, Microsoft says it's going to invest $3.2 billion to boost AI and tech in Australia, and will be over in the next 2 years. So the Microsoft going to invest almost 3.5 billion in AI and tech in Australia. Hey, what's up, Derek? Yeah, I don't see much about the Q. Nvidia is still technically red. Again, we're going to try to day trade today. I'm going to put up the regular E-mini. I try not to trade the NASDAQ until I build up a cushion on the day first. So the goal is to build up a cushion. Yeah, options trading, Nathan, can have a lot of nuance behind it, brother. You know, just be careful. Hey, bud. How you doing, man?
Good, I guess.
Love you, buddy. Here, my son's trying to show y'all his Lego set. Here, hurry up, bro. I got to talk to your mom real quick. My son's got his Lego set right there. It's cool, dude. All right, buddy. I love you. Okay, have fun at school today, buddy.
Like to try.
Hey guys, hold on 1 second, okay? I'm gonna put some music back on. Sorry, talking with my family about something, so I'll be right back. All right, guys. Sorry, yeah, talking with family. All right, guys. Hey, we got 15 minutes. 15 minutes. Yeah, my son liked his Lego set, so he's getting there, man. He's getting there. Anyways, guys. So yeah, market started to dip a little bit. We've been in this trend though, so you can kind of see this trend on the E-mini, on Tesla, on the Q. I wouldn't say it's a great trend, but we can kind of see somewhat of it. If we put up like a 5-minute chart, you know, you can see it a little bit more clearly here. In terms of trends, a little bit more clearly here. And so we can kind of see this trend on a 5-minute chart. Maybe we'll hold, maybe we don't. All right, I'm also going to throw it in sub-only mode for the stream here, guys, because we're getting some trolls. So again, listen, my big thing here, guys, regardless of whether you agree or disagree with me on any direction or benefits of long-term investing, my big thing here is, like, I don't sell a course. I don't sell a service. I don't claim to be an expert. I don't act like a guru. I don't claim to be profitable. I don't claim anything because I don't want that pressure. I'd rather just report free market data. Mostly what we do here is cover economic reports and earnings. And so we're going to cover all the big earnings this week, next week. If you want a reliable place that covers all the economic reports and earnings, Jerome Powell press conferences, streams, all that good stuff, this is the spot. And again, hit the sub button, hit the notification bell. I appreciate it. I'm very much anti-guru. I think there's so many people who look at these day traders who they're fugazi. They exaggerate everything. And then a lot of gullible people look at them as mentors, like they're celebrities, right? Like they're celebrities are so desperate to talk to them because they idolize them. Because again, a lot of them are just nonsense. They're just not really, as Lil Boosie famously said, you ain't about what you be talking about. I'm from Louisiana. I'm sorry. I had to quote Lil Boosie there. But the point is, they're full of crap. They're nonsense. Like most of the time, they're not really owning the stuff that they say they're owning. And in the end, you got to just trade smart. Understand buying a course is not really going to get you where you want to go. Most content can be available for free already. And you don't have to buy a course for $3,000 to get this stuff. Most of the time, experience is going to trump any other learning aspect of it. The more experience you have, the better you're going to be at it. And so buying a $5,000 course mentorship program is usually just nonsense, Yeah, sorry. Yeah, Lil Boosie. I'm from Baton Rouge, Louisiana, which is, But yeah, Nvidia up to 413s. We'll see if it holds. Nvidia right around that previous close. Nvidia has tapped that previous closing price multiple times. So look, you see the previous close. We've actually tapped it twice now. Cathie Wood. So did she? What was the Cathie Wood trade? Explain that trade to me. Explain the Cathie Wood trade to me. I'm genuinely curious about it. I want to hear it. I heard about Tesla trade. Let me see. I'm gonna have to look this up. Cathie Wood's losing money. That's the big story coming out. So she's losing money on Tesla, Coinbase, Zoom, DraftKings, and Roku. See, honestly, I disagree with a lot of her holdings, man. She buys up these really hyped up stocks. I just disagree with a lot of them. Specifically, I'll tell you the ones I mostly disagree with. I think Tesla's okay. Because I think long term you got to have some exposure to Tesla, or and it might fail. And again, it doesn't have to be your main stock in your portfolio, but I think having some exposure to Tesla makes sense, just because it's one of the heaviest weighted stocks in the S&P. And so if it runs and you're not holding it, you're gonna miss out. I think the biggest stocks I disagree with in terms of Cathie Woods though are Zoom, ZM. I think ZM is a very replaceable software. I've been saying this for years, and Zoom has dropped from $400 a share down to $60. The problem with Zoom is, again, it's a very replaceable software. It's down, it's down over 25% this year. It's dropping heavily. So Zoom is one I disagree with. The other one I disagree with is Roku. And again, I've been talking about this one for years as well. The problem with Roku is that the software is replaceable. And I think these TV companies, I think a lot of the software that Roku uses is replaceable, as well as it's going to become obsolete over the next 10 years as technology grows. You don't really need a place. Most of these TV companies are going to be able to build something similar to Roku in-house as software without needing to go to Roku. And over time, I think that's going to be worse and worse and worse for Roku, as well as the hardware aspect is going to grow obsolete, right? And so those two specifically, again, DraftKings is all right. Again, I think it's really a speculatable company, but I like DraftKings. Again, I like DraftKings. It just depends on the price it's at. But again, Roku and Zoom, I think, are the biggest vulnerable stocks there. Tesla too. I mean, with Tesla stuff, but I think time will tell there. She's also holding Roblox, SQ, and some other ones, and I'm holding some SQ, but we'll see. All of these are really weak, and she's been struggling with those. Where you recommend getting learning trading from besides yourself? Don't have to shout out anyone, just wondering what the best at buying a course isn't the best. Well, buying a course, the problem with buying a course, Derek, and again, I'm going to tell you this, and again, confirmation bias like reigns supreme, and like that's what. Okay, so the gurus live off of confirmation bias, right? And what I mean by that is like humans have this tendency to want to confirm what they want the truth to be, to confirm what they want the truth, what they want instead of what the actual reality is. So they want to confirm what they want to happen, or what they want to believe versus what actually happens. Okay, and an example of this in stocks is like courses. So again, the thought experiment I always give out is if you spent $10,000 on a day trading course, right? And after that day trading course, like the course was okay, but it was mostly publicly available content, right? Are you going to come out and tell everybody, hey, this course sucks, like it's mostly publicly available content? No. Like your head is going to convince yourself that somehow this is just deep value, that you're just, wow, man, you're robbing the bank with value, just amazing value, because that's what you want to be the case. You're desperate to justify spending that money. Like you don't want to tell yourself, hey, I just wasted 10K. And so you're going to look at that content under the lens of, hey, this was worth it. This was worth it. This was worth it. Because that's what you want it to be. You want it to be worth it. Right. And over time, when that happens so much in terms of day trading courses, what you get a lot of the time is you get like all these different shills for these courses, just talking about how great the course is, how great the course is. And the courses are mostly publicly available content. Like you can find the same stuff in these courses out on YouTube for free already. I'm not going to name names, but you can find them out there. Like you don't need to spend 5K on a day trading course because the content in those courses is going to be mostly stuff that you can find for free on YouTube already. You know, and that's the thing to understand. And when you start understanding that, you start realizing like, hey, like you're getting marketed to, you know, which is fine. And if the course is less than $500, fine. I'm not against that. I'm not super mad if you buy a course for $500. But when they start to dip into the $6,000, you know, lifetime membership, 6K, you know, all this nonsense, that's when people are really getting taken advantage of. And most of the content you can find for free. You don't need to buy these things. And again, we're on the internet. And so I'm not saying you can Google and find some of these gurus courses for free already on the internet somewhere floating around. I would never recommend you do that. Of course, you know, I would never recommend you Google some of these gurus courses and find their content available for free on the internet somewhere. I mean, who would tell you to do that? You know, but I'm just saying, anyways, but yeah, Nvidia's at 412s. We'll see if it holds, but oil down 1.4% today. Yeah, oil has been ripping up with the conflict overseas, making oil more scarce is what it is. That's the logic of oil lately. The trouble overseas making oil more scarce and making, you know, the price of oil go up. Exxon at $112. Yeah, for sure, Justin, 100%, man. And again, I'm not against all of them. Like I'm not against people who sell courses, but there's a level at which they're just, you know, they're just being sleazy. And again, a lot of people don't like me because of it. But again, I don't even claim to be good. I don't claim to be an expert. I don't claim to be profitable. I don't claim to be any of that stuff because, again, I just don't want to be a day trading guru. I never have. Like, I've always been against that. I couldn't sell a course if I wanted to right now because I would get so much heat for it, which is good. I back myself into a corner. I don't ever want to. Again, there's no paywalls behind my content, which is what I wanted it to be. Anyways, E-mini break it down a little bit. You can see the cube dipping down. You can see Nvidia coming down to 412. So we also got to watch Tesla at 209.80s. So Tesla's still in that same trend that we've been in. Who? The actor? Chris Jackson? Why? Ford and GM earnings tomorrow. Yeah, something like that. No. I don't think it's Ford and GM unless they're in the evening. Oh yeah, no, it is. No, I think it's Wednesday for Ford. Oh, it's Thursday. So yeah, Ford earnings are Thursday. So yeah, they're not. GM earnings, I believe, are tomorrow. Yeah, so GM is tomorrow. Ford is Thursday. Mike Jones. I met Mike Jones once, bartending. He didn't say anything. You know, I met Mike Jones, and the way I met him is, I remember Mike Jones from the early 2000s, and so when we saw him, he had lost a bunch of weight, but it was like you could still kind of tell it was Mike Jones. And when I went up to the girl, like I used to work at the Marriott. I'm not gonna be specific, but like I used to work at the Marriott, one of the Marriotts in Houston, and so when I went up to the girl that like I knew that worked there with me, and I was like, and she was like, "Hey, I think that's Mike Jones." And I was like, "Well, what's his name under?" And she said something like it was like an Asian name. And so we figured it was like somebody else's name that he was under. And then they went to the bar, and he ordered 2 shots of Patron. And he tipped really well. He didn't actually talk, right? And I would have like fanboyed and be like, "Hey, Mike Jones, what's up, dude? Like, let me get a picture." But he was obviously not trying to be seen. His name wasn't in the system. And so I talked to this very pretty girl that was there, and she tipped really well. But that's all they did. They just kind of, came, got a shot of Patron. I think they got 2 shots of Patron, and then that's it. Didn't see him again. Yeah, I mean, gut feelings can be good or bad, though. They can move in your favor, move against you too. Yeah, I never heard of him. ExxonMobil just popped up, but now it's not really holding. But I see ExxonMobil move. I don't know if it's a catalyst-driven move or what. Yes, for sure, Tony. That's what I'm seeing right now. All right, again, we're going to be day trading on Top Step today in the futures market. We're going to be day trading in the market right now. And so if you want to check out Top Step, link is in the description. You can see that now. Market's about to open up in about 2 minutes. 2 minutes until the market opens. But yeah, I see oil pop. It kind of retraced pretty quickly, though. If I look at like oil futures, they popped up a little bit too. Over volume weighted average price. NVIDIA tried to bounce, so maybe we'll get a bounce right now. I might buy this little dip here just because I see some volatility right now, and we're at the bottom of the trend line on a 5-minute chart. And so we got 1 contract at the regular E-mini. I don't know if we're going to take any more than this. And we are on a 5-minute chart, so it's going to have to be a longer-term trade, although the opening bell's in 2 minutes. I'll see if we can make a small gain from a dip buy at the bottom range here. And if so, great. I'll try to cut it before the opening bell and just build up some cushion into it. All right, so we're up $25. See if we get a little bit more. 25. Tesla trying to creep up too. Flat on the trade now. We got about a minute left. Yeah, I mean, Wednesday, we got a bunch of earnings, man. The earnings releases are the big story this week. I mean, we got inflation data on Friday, GDP on Thursday. So we got some busy stuff coming out in the mornings for economic reports as well. But the real busy stuff is earnings. Again, tomorrow we have Google and Microsoft. All right, guys, we got 45 seconds. I'm trying to make some money from this real quick. There we go. So we just made $37 or so from this, $40. Caught the gain, and now I'm able to cut it before the opening bell, which is good. All right, so yeah, we got one gain today. Built up a cushion. We caught the dip on that. I'm gonna put up a 1 minute chart. We caught the dip on that trend line bounce that we drew here. But again, we got Nvidia moving up a little bit as well. All right, Nvidia just popped up to the previous closing price. Nvidia trying to test that level. Tesla dipped and then bounced back. It's over 210. Look at Nvidia push though towards this level, and you can see the market starting to rip up after the opening bell. So we're starting to gain some bull action here. Pretty big move on the upside too. Big green action. Tesla retracing some of the losses it made. Nvidia just went green on the day. I think we need a green day today. We'll see though. Again, Tesla at 209. All right, so we got a little dip at the open. Do I want to buy this dip? Probably not yet. I'm going to let a couple minutes pass to settle down before I try to take some more trades. We got a little cushion so far, though. All right, so we did get a bounce at that bottom trend line. Tesla's still dipping down. It hit lows of 207.75, so Tesla's still a struggle right now. I don't trust it. We got a very flat open, both in Nvidia, both on the S&P. A lot of stuff sideways right now, and it might just be waiting for all the big economic reports we got dropping today, man. We got a gang of stuff coming out, so maybe that's what's going on today. I don't know why. All right, so again, Tesla dragging the market down. It's at 207s, 206.60s at some point. Nvidia also broke down a little bit as well. Are we going to get red action? Are we going to get Black Monday today? I don't know. Hey, what's up, William? Yeah, not a good open. Again, Tesla's the weak one right now. Tesla all the way down to 206. Yeah, that's why we named our stream this, because I said, like, this week is when we could get some scary stuff, to be honest. Like, it could be scary this week for sure. All right, I'm going to short this, although it is kind of risky, but I'm going to short in case we get a large breakdown here. There we go. We're green. We got a cushion on the day already, but I also have to be careful because if Tesla doesn't break down more, I'm going to have to be careful. All right, we got 2 contracts here. There we go. All right, we just took half off, breaking down some more. There we go. All right, nice. So we just locked in a pretty nice little gain there. We're up about $130 or so in this account. We're on our way to building that cushion. We thought we might get a short breakdown. Yeah, we don't really have any reports today. You know, there's not really any big economic releases today. Tesla's really the scary weak one right now. You know, you can see Tesla, you can see the Q. Starting to get a little pop up. Tesla all the way down at 205 here, man. Tesla looking really weak. Yeah, I mean, we called it on the stream name, man. People got mad at us, but like, I think today's one of those days where we could get big slumps. Tesla has had 1, 2, 3, 4, 5, 6, 7 huge red candles at the opening bell, like monstrously big candles at the open. Big red action. Again, we're watching it close. It's dragging the market down. If Tesla continues to get weak, we will short some more, but I think we got to wait. Pretty big little pop back. I was going to short it, but we've already retraced some. NVIDIA bouncing back a little bit too. All right, is this going to be the first green candle Tesla has since the opening bell? It looks like it. All right, so Tesla just had its first green candle since the open. I was thinking about shorting on this little pop bounce, but I guess I'll wait. Maybe I should have. All right, Tesla's struggling here, so I'm going to start adding to this position here. We got a cushion on the day, so we could probably take 2 contracts of the regular E-mini. So Tesla's starting to break down a little bit here. We got 2 contracts. Right around break even on this one. Tesla's starting to flush down. There we go. Yeah, Tesla's all the way at the lows of the day again. And so I'm worried Tesla might continue to break down. So, all right, so we just took half off. All right, I went ahead and locked in some more. So we are up about 175 on the day. 175. We got the cushion, part of the cushion at least. E-mini starting to turn. Look at Tesla top the low of the day and then bounce. So no, I don't really have any problem with toss today. I don't know, Raul. I'm not sure, man. It really depends. Like, I think Tesla looks weak. The market looks weak. You know, the bond yield curve was inverted. Which is weird and not really a good signal. Where's Bitcoin at right now, despite all of this stuff? Bitcoin dropping with the market too. So Tesla trying to build a low now, but I'm watching. All eyes are on Tesla right now. Tesla's what's dragging down the market, and it's right around the lows of the day. It's been mostly sideways over the last 3 or 4 minutes. And so watch what Tesla does here. This is an important level. If Tesla cracks lows, it might drag the rest of the market down. If Tesla starts to find a bottom, then we might be looking a little bit better. Tesla consolidating. Tesla very sideways. Again, a lot of question marks right now, I think, with everything. And again, if you haven't already, check out Top Step. Top Step, if you want to day trade with me, again, what I do is I try to build up a cushion first. And so you can see we are almost there. We got about $180, $175 in profit, 4-to-1 win-loss ratio. So my job is to build up a cushion. And then once we have that cushion, I'm allowed to take larger risks. And this is a funded account program. So they give me a demo and they test my skill. And if I can hit the target while following the rules, they fund me between 50 to 150K with a 90% split. We've been funded on two different funded account programs, or 3 funded account programs over the last couple months. And again, the system I have for building up a cushion and then taking larger risks into that cushion makes perfect sense. There's the SPY break it down a little bit. And so they give you a demo, test your skill. It's one of the ways to limit your risk when you're learning to day trade. And so if you want to check them out, here's the link. Great way to help support the channel. I'm definitely biased in their favor, and you want to confirm everything with them, but a great way to learn day trading with limited risk. There's the link right there. Check it out. Again, we're still breaking down on the E-mini. Tesla's still sideways though, which is interesting, which asks the question, what's dropping? Apple's dropping right now. Tesla at 205 starting to bounce up a little bit. Definitely a bloody market right now. You know, look at the Q. Q down to 351. Tech looking weak. Tesla's still kind of breaking down a little bit here. Tesla down at 203s right now, 203s. Definitely in a pretty big red trend. All right, so we got a cushion. Yeah, again, I told you today could be Black Monday. I saw it trending a lot. Kind of a risky time in markets. I thought today could be red. Again, we got inverted yield curve. We got Tesla earnings tanking the market. We got earnings coming next week, and maybe the earnings will save the market. Maybe they'll hurt the market. But I told you guys this is, you know, I don't really try to predict a lot of crashes. You guys know me. I'm usually a bullish trader. But again, I certainly saw something this last week that I didn't like, which is why, you know, while everybody else is constantly predicting crashes for the last few years, right? I was right about today, at least so far. You know, and I'm very selective with predicting crashes. I usually don't try to predict them very much, but yeah. All right, we'll see. And again, Tesla is really the one like hurting the market for sure. All right, finally got a pretty big pop here. I might short this, look to capitalize on the trend, although it is a risky trade. We do have a large cushion on the day already. So there's 2 contracts. So we're flat on this trade, but there's definitely risks here because, again, the market's down so much that we might bounce back and consolidate before. So we can take a larger risks with 2 contracts now, but I also have to be prepared to cut it and get out break even if I need to. Not going to hold this one much longer either. All right, so now we're flushing back down a little bit. I'm going to take half of the trade off here just to protect myself. That way I don't take any like crazy big loss. It looks like we were right about this direction. We'll let this sit a little bit. But yeah, we took our large risk. We pushed up a little bit too much against me. I should have waited for it to settle down a little bit more before taking it. Big tech survive, mid and small caps crash. Yeah, 100%. I mean, people invest in mid caps like they're Google or Microsoft or whatever, and most of the time they just end up getting owned by them. You know, the marketing is so much more persuasive because they need to be more persuasive to talk people into buying them relative to like Microsoft or Amazon or whatever. You know what I mean? So like that's what it is like if you're a weaker company, it's harder. You got to talk traders into buying your company more than the big boys because, again, the big boys just don't need to. All right, so we're going to get close to cutting this. It's just too much risk. Yeah, I'm going to cut this and just wait now. That big bounce back for sure too. Tesla bounced back a little bit as well. Nvidia actually won fighting back, climbing back some. So maybe we're not in Black Monday yet. Yeah, hey, we'll see. I hope the market bounces back. I really don't hope. I really don't want the market to crash. You know, I think most people should want the market to do well and go up, and we'll see if we do. But I definitely don't want the market to crash. Nobody should. You know. Look at Nvidia pop. 415's cup and handle breakout pattern here. We're gonna switch to maybe trade the Nasdaq a little bit too, if we can. Sorry, it's taking a while to load the NASDAQ. Beautiful rebound, though. Will the market continue to bounce back, guys? Look at Apple. Apple going green on the day. Tesla climbing all the way back up to 205s. I'd rather see a bounce back than not. All right, there goes Tesla. Tesla back up to 206. There goes NVIDIA. Yeah, big V. It'd probably stopping out a lot of traders and then catching back up. You know what I mean? Also, guys, check out Chart Prime. Chart Prime is a trading view indicator service that you can use in stocks, crypto, forex, futures. Number one is, like, you can see on Chart Prime, I actually add these alerts on my charts. So I actually add these alerts so I can get alerts when the signals show up. Again, my favorite signal to use, without question, is the regular market oracle. Because again, what I back test here, and they need to be close together. These are too far apart. You can see these are 1, 2, 3, 4, 5 candles away from each other. They're too far apart. What I look for is when they're close together. Like, these are where this is close enough, these two. And then look at the beautiful bounce you get from it. And I challenge you to back test it yourself. This is a trading view indicator service you can use in stocks, crypto, forex, futures. Back test it yourself, because again, we can show you this here. Beautiful bounce. Look at this one when more than one show up together. Beautiful bounce. Even this one that didn't have the engulfing candle. So again, I look for the reversal signal and engulfing candle within the same, like, 3-4 minutes. If it's 5 minutes, like the one back there, it's a little bit too long. But look at the drop there from that one. And again, I challenge you to back test this yourself. You can keep scrolling back here. Look, again, you'll be surprised, I think. Look at this. Reversal up, bullish engulfing candle, right around the same spot. Beautiful bounce. And this is like 2 hours. Again, same thing here. Engulfing candle on the downside and possible reversal down. Again, this is like hours and hours of price action. And so you can kind of see, I can't fake what I'm showing you. Look, here's another one. Engulfing candle, reversal signal right at the same spot. Beautiful bounce. Again, I challenge you to back test it yourself. And this is just a small piece. You can use this on an hourly time frame, on a 1 minute time frame. You know, same thing here. Engulfing up, engulfing candle, reversal up, beautiful bounce. Same thing here. Reversal up, bullish engulfing candle, beautiful bounce. Same thing here. Reversal up, bullish engulfing candle, bounce. And so again, that's how you find reliability in these reversal signals. Look, 2 engulfing candles, reversal down, drops. It can be powerful. And again, this is just a small piece. The other one is you can look at a shorter term one called the Regular Market Oracle Pro. There's chart patterns. I can put up oscillators, smart money concepts. There's just a lot of edge that you can get. You can use these on any time frame, stocks, crypto, forex, futures. A lot of people use them in crypto as well. And like, you can see the flag patterns and the breakouts, buy, sell, strong sell signals, smart money concepts. There's just so much different tools that they offer. And I think it's like, if you use my link, it's like 40 or 50 bucks a month. And so very cheap. Again, if you want to check it out, it's called Chart Prime. You can check out the link right there. They are a sponsor of mine as well. Definitely biased because they pay me money. But again, genuinely useful. You can also find both of the links for these in the description as well if you're interested. And again, I'll put the link up right here. Nice little V pattern too. Tesla rising up as well. Let's see if the market comes back. I hope it does, to be honest. Like, I don't want the market to fail. Yeah, NVIDIA up to 417s. It's still got a long way to go, but it's definitely better than it was. Yeah, again, the market's too whippy for me to really want to take heavy parts in this. And so y'all be smart, but I want to short the I want to short the ES, but it looks squeezy. Yeah, I mean, again, I'm skeptical right now. This is all kind of sketch to me. Hey, what's up, Nando? Nvidia finally pulling back a little bit. Now I could buy the cup and handle pattern here if we get something that looks good. I guess I'll buy the dip right here, see if we get a little pop. But there's just so much, again, it's so volatile right now on the NASDAQ that I have to be ready to cut it if I need to. All right, so we got a little squeeze up. It looks like it wants to squeeze. We got some down wicks. That's usually good. All right, we got a little pop. Up 80, 75, 100. All right, we'll go ahead and lock that in. All right, so we caught the little gain here. Yeah, thanks, Tiny. I'm probably going to go ahead and close it down. I just don't see any big profound edge right now. Again, tomorrow's crazy. Wednesday's crazy. Thursday's crazy. I'm going to go ahead and bow out for the day. We'll see what the market gives us right now. Again, it's still pretty volatile and just kind of ridiculous movement here. And again, if you want to day trade with me, check out Top Step, funded account program and futures. You can use it in stocks, or you can't use it in stocks, but you can day trade the S&P. You can day trade the NASDAQ. You can day trade gold. You can day trade currencies. The patterns are very similar to large caps. There's just no PDT rule, and these funded account programs are allowed. And so most pro traders trade futures. There's better liquidity in futures. Like if you look at this in early morning relative to like the SPY, the liquidity is typically a little bit better. And it's just a great way to learn. You know, if you lose, you're out $49. And so it's a great little challenge for new traders. If you're good enough to pass it, you know, you can get funded. And again, check out the link. I'll see you guys later. Love you all. Y'all be safe. I'll see you guys tomorrow, bright and early. Tomorrow, guys, again, tomorrow we got Cleveland Cliffs, Cadence Designs, Logitech, and a couple other big ones to work on. So again, still ripping up in the NASDAQ here. But yeah, sorry. So if we look at the earnings reports, where did my earnings season go? There it is. Okay, yeah. So tomorrow we have Coca-Cola, Verizon, GE, 3M, Spotify, RTX, General Motors, Halliburton, Danaher, a bunch of other ones, Polaris, Microsoft, Google, Snapchat, Teladoc, Texas Instruments, Matador, Range Resources, Boyd Gaming, F5 Networks, Hawaiian Holdings, Stride, and a bunch of other ones. So again, a lot of stuff dropping tomorrow. We'll see if we get in anything good. NVIDIA is really the run of the day that's bringing the market up. If you look at NVIDIA, again, NVIDIA is flying up right now. It's at 420. So again, y'all be safe. I'll see you guys tomorrow.